Oh man, so crypto has now pulled back around 10% from its highs of 24,300 in just 7 or 8 days. What is going on? Crypto is facing some major technical headwinds running into its weekly EMA ribbon. They've also got some fundamental headwinds, starting off with the SEC charging Kraken for the unregistered offer and sale of securities for its staking program. Yes, Kraken has had to end their staking program, which was offering yields of 20 to 21%. We're going to weigh in on that. What does that mean? That's led to some of this downfall, but otherwise, this downfall has pretty much been predicted. This is what I tweeted a day or so ago. I said Bitcoin trying to hold this ascending broadening wedge, but I expect a breakdown to 21.6. If we jump on over to the charts, let's switch it down to the 4-hourly chart, and let's bring out that same drawing so we can take a look at exactly how this is playing out, because we did indeed get the breakdown. Exactly at this point when we started falling, everybody got excited that we had a bounce. And at that point, I warned in my video, you guys can see the clip, that this is likely to head down, retest the backside, and then fall. Exactly what it's done. Now, I then said, when does the support come in? The support starts coming in from exactly this region, 21,600, which is what I put in my tweet. That's exactly where we wicked on this 4-hourly candle. Now, the support does lie all the way until 20,600. So this is an important level to hold. If this period between 20,600 to 21,600 cannot hold, then we have to look for other support. Now, I hear you shouting, what are the other levels of support? Well, I'm going to come into this chart because you can see the other confluence with where we're hanging right now is this green horizontal line. What is the significance of this green horizontal line? Well, if you've been watching this channel for a while, this has been a very important support and resistance line. We had the bottom of the channel, 18,700. The top of the channel has been here at that 22,000 mark. This is an important level to hold. If it doesn't, and this cluster here, which I showed you, doesn't hold either, then you're looking at 20,000. If you've made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on SKILLSHARE. For those who aren't familiar, SKILLSHARE is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements, because on YouTube everything is about retention, whereas with a course you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days. If you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it, and let's get back into this video. And the worrying sign if we head to 20,000 is that the bears can really take a good footing at that level. So as we see these levels, I will start nibbling a few more DCA positions. We just had a course member live stream yesterday where I built a pie in OKX for my gaming and metaverse portfolio. If you guys want to join that, ijaz.uk/member, you can join and cancel at any time, and the recording is all available of the portfolio we built for our gaming and metaverse portfolio. That's all in there. That's what I'm looking for here. Up to 20, I'm quite comfortable. I'm happy to buy the dip. This pullback is healthy. I don't think people are understanding what is going on. I just wanted to zoom out to show you what has just happened since the turn of this year. Going into December, we called this double bottom pattern. Okay, you can see here in the new year, we started working our way to the neckline. We broke the neckline with vengeance on the 12th of January and went on a crazy run. We consolidated for only 4 days. We went on a crazy run. Then we consolidated in an upward trend, ascending broadening wedge, and now it's pulling back. Like, this is okay. If you take it from the peak of where we were to where we are now, this is a 10% pullback, okay? It's not the end of the world, and in fact, I'd even go as far to say as this is healthy. Even coming down to this level here, where this cluster of support is, around that 20,500 mark, is okay, right? It's not the end of the world. If I bring out the EMA ribbon, you can see that ties in with the bottom of the EMA ribbon around that 20,500 mark. If we fall lower than that, down to 20,000, and lose our daily EMA ribbon, then we have to be a little bit more concerned of a bigger pullback, because then you can see exactly what's happening here on the weekly chart. And that is what I've been screaming about this whole time, which is we are in a bear market rally. I've enjoyed the rally, I was in the market for the rally, but at the same time, we have to be very cognizant of the fact that we are not in a sideways market, nor are we in a bull market right now. We are in the hands of the bears. And until we flip this weekly EMA ribbon, they had not capitulated. And you can see they stepped up with a little bit to spare, right? They could have even stepped up at 25,500. They stepped up at 24,300, the bears, and they said, we're going to give you a run for our money. We need to see a higher low formed and a higher high, and this is how you trend out of the situation. Excuse that wiggly line, right? You cannot go and revisit these lows. You need to turn somewhere sooner than that. Even if you want to turn at 19,000, even if you want to turn here at 18,500, it's okay long term on the weekly chart. But just turn around. The Bitcoin bulls need to show some strength. Let the bears have their moment. Let the RSIs reset. You can see here on the RSI, even on the weekly, we're getting towards that overbought territory. If I pop it down to the daily, you would definitely see we're in this overbought territory for a long time. So the RSI is going to reset now, which is a good, healthy sign. Let it reset. Let the bulls then step back in. We were getting a lot of froth in the market, guys. I don't know if you sensed it, but the fear and greed has now notched back down, which is good. We're back into neutral. This was sitting in the greed category. You saw the AI plays running. You saw everything moving. Everything was pumping. Anyone who mentioned a little bit of AI, it was gone, right? It was just all moving, and that was frothiness from tourists coming into the market. So this is good. Nice little pullback. Now, what isn't so great is what is going on over at Credit Suisse, and I had to bring this to your attention. I made a video 4 months ago highlighting from the data I saw from credit default swaps that Credit Suisse could be in a bit of a bother. And now we're seeing that they had horrible earnings this week, and also we're seeing that the Swiss regulator, FINMA, is saying they're monitoring them very closely. In other words, they're struggling for liquidity. If you have a bank run at Credit Suisse, this could have huge ramifications for the wider market and therefore crypto. This could set us back in 2023. So I wanted to put this on your radar that I'm keeping an eye on this. This could be a potential problem. Also, what's going on is Gary Gensler. Let's play a quick clip from this 3-minute clip that Gary Gensler posted regarding Kraken.
What does stake have to do with our securities laws? That's S-T-A-K-E, not S-T-E-A-K. Basically, if you transfer your tokens to a staking as a service provider, they take control, possibly pooling your tokens with thousands or millions of others while promoting returns. But here's the rub. When a company or platform offers you these kinds of returns, whether they call their services lending, earn, rewards, APY, or staking, that relationship should come with the protections of the federal securities laws. That means you, the investor, should receive important disclosures. For example, what do they actually do with your tokens? Are they really staking them? Are they lending, borrowing, or trading with them? Are they commingling them with their other businesses? Where do the rewards come from? Are you getting your fair share? Are the underlying crypto protocols genuinely creating value on your investment? Or are they just new tokens that dilute the value of ones you already have? Remember, if you have a stake, that's S-T-E-A-K, if you have a stake meant for 2 and cut it into 3 pieces, it's still the same amount of stake. Unfortunately, because these staking as a service providers generally are not providing proper disclosures, there's currently no reliable way as an investor to know the answers to these important investment questions. Plus, when you sign on the dotted line or accept the terms of service, you are generally agreeing that placing your tokens with these providers may mean transferring your ownership to them. There's an expression in crypto, not your keys, not your crypto. You see, you're basically an investor in their platform. If it goes under, and we've seen plenty of that recently.
And look, guys, I covered my thoughts on this yesterday. Look, it's not a great look, but ultimately, you have to think about it. What's going to be the end game of what happens here? You're going to drive people back to the decentralized options, right? People are going to go back to Lido. They're going to go back to other variations of where they can do their staking and lending decentralized. I think what's happening is there's a little bit of a confusion as well between staking, where staking is required for a consensus mechanism for a blockchain, versus companies which are just exploiting the word staking to offer a lending facility, which should be registered, of course, as a security. So there's a lot going on, a lot of people giving Gary Gensler backlash. I also give him backlash because where was he when the whole FTX drama was collapsing? Nowhere, but you want to come in to kind of, pick up the scraps thereafter. This is all late, pointless stuff. You did not do your job in 2022, and now you're trying to pretend like you're doing it by targeting Kraken. What does this mean? Coinbase, other centralized exchanges, maybe that's now set a precedent for them to cancel their staking programs as well in the US. But interestingly, Gary Gensler's view isn't the only one out there. We also had this Commissioner Hester Pierce. Today, the SEC shut down Kraken's staking program and counted it as a win for investors. I disagree and therefore dissent. Very interesting what she says. She also says here, she goes, instead of taking the path of thinking through staking programs and issuing guidance, we again chose to speak for an enforcement action, purporting to make clear to the marketplace that staking as a service providers must register and provide full, fair and truthful disclosure. Now, what she's alluding to here is something we spoke about last year. I remember we were speaking when Coinbase's EARN program got shut down by the SEC, which is where they wanted to launch something similar, where you could stake and make a yield. At the time, Brian Armstrong, who also started off some of this drama yesterday with his tweet, which we covered off, he said that, look, the SEC, you just need to tell us what is right and wrong. We're trying to adhere by your rules, but you're not clear. And Gary Gensler is making this a huge minefield for any entrepreneur who wants to set up a crypto business. Why are you going to set up in the US? Why would you not set up in Dubai? Why would you not set up somewhere else in Asia, right? People are going to the Bahamas like Sam Bankman-Fried because of this. There's no regulatory clarity. If you have clarity, companies can go, okay, I choose to follow these rules. I'm going to follow these rules. I want to be publicly listed like Coinbase. I want to follow all the rules and play fairly. Tell me what the rules are. But they're not doing that. They won't tell you the rules, and then they're just randomly enforcing and charging people when they know that there's no regulatory clarity. So huge mess over at the SEC. They're fighting with the CFTC, loads of infighting going on as well. What a mess, and not a good advert for the US and crypto. Interestingly, today has started off fairly flat here, 0.15% on Bitcoin. Altcoins also waiting for some direction as well. No major moves apart from Matic, which is up 4%. If we head on over to the pre-market, you can see the pre-market's actually opening up red right now, down 1%, S&P down 0.5%, and the Dow Jones down 0.2%. Like I said, this is going to be a painful and scrappy year. A lot of uncertainty, a lot of to-ing and throwing in the market, out the market. Investors are really confused, and that is why we're seeing such volatility in the market. But in terms of the Bitcoin pullback, am I panicking? Absolutely not. We saw this ascending brooding wedge playing out for a very long time. A pullback is always good. Look to add from positions of strength closer to the EMA ribbon, buy when others are fearful, and that is the strategy you want to be holding through your crypto career. When those pumps were coming, I sat on my hands. I followed my rules, which I share with you guys. I sat on my hands. And now, when people start to get a little bit more fearful, as we start to get to some of those more painful price points, when suddenly, for some reason, even though we were sitting at 24,000, people think we're going to head back to 8,000. When I see that fear, that's when I want to be allocating my positions. Hope you guys enjoyed this video. Don't forget to smash up likes. Don't forget to subscribe. Thanks for watching. Have a good weekend. And I'll see you in the next one.